GM. So I've potentially shorted the absolute top on oil. We got a 2-week ceasefire agreed from both the US and Iran, which absolutely shook the markets up. So let's dive into it. In yesterday's video, I told you guys Wall Street's war signal changes everything. Volatility alert. And boy, did that come with the ceasefire headline. That's changed everything for your risk assets because markets are now having to price in the potential for not only peace, but the war actually ending. We're seeing hedges unwind, and the short trade, which I told you guys about 3 days ago, and I've been mentioning it in pretty much every video, which I'll play for you now, has come to fruition. We've been patient. Listen to this. Either way sets up for a decent short on that first retest because you've got a nice gap to trade into here. The times you want to short is when you've got a gap to trade into because there's inefficiencies below that likely get filled in and retested. So that's what I'll be looking at for. So boom, gave you guys the setup. That's now playing out beautifully in the school. I also mentioned it with the order here. This is in the inner circle where I took the short setup. Then overnight, we got the big unwind. Short started printing with that 2-week ceasefire news. But it's not about the news, guys. As you saw, I've been planning this trade for days now. I didn't know there was going to be ceasefire news. I just saw price coming up into resistance, into the H4 imbalance zone over here, which when we saw price rejecting it, which was when you started getting rumors of ceasefire coming, which I updated you all again in the school about, I got short. Then the news comes in, but price was already telling the story because it was at resistance. And we saw US oil trading at a massive premium to the Brent contract. So what we were seeing was this trade where we've been having, instead of US oil and the Brent oil trading 1-to-1 as they typically do, instead, we've had US oil trading much higher than the worldwide contract, which made no sense to me because the US are the least affected by the Middle East conflict. They're a net exporter of oil. The oil that should be most affected should be this worldwide contract. Therefore, what I think we were seeing is a lot of traders, they had been going long on the worldwide oil contract and short on the US contract, because then you can take a risk-free, in big air quotes, trade if you see, a big conflict coming, war coming, and if oil rises, you're then going to be able to capture the spread as the worldwide contract's likely to rise more than the US one. But if everyone's shorting the US contract playing that trade, then we got exactly what we saw, where those shorts started to get really squeezed up, which means longs aping in to the market. So that's why I chose to short this contract over the worldwide contract, and this from high to the low went down 22.6%, whereas from the same high to the same low, this went down just 17%. Now these usually, as I said, they trade 1-to-1. If you go back in any previous price action history, if I go to, let's say, over here, notice how they tend to look the same. As you can see, pretty much 1-to-1. It's only since this war breakout that you've seen these two markets actually decorrelate, because at the end of the day, oil is oil. So that's where the opportunity really lied, in the fact that you could see everyone was getting on this short US oil, long worldwide oil trade, because then you don't have that directional risk, or at least not as much, since oil is expected to rise in a war. But that led to this contract trading much higher, meaning longs were way more in the red if we did dump down. And again, price action told the story as we were at resistance. So now managing this trade, to give you guys a quick update, I've put the new stop loss back at 100.45, so that will lock in 3R if hit. I'm going to be tracking the H1 market structure now, so closes above the H1 MS over here will trigger a 50% TP for me at least. But if we don't trigger that, then I'll be looking at 89.51 and 84.37 as liquidity targets to take some profits off of this trade. So that's the trade there. Below the daily bands now, you're seeing quite a violent unwind. You've got this previous imbalance zone, which also has the daily 50 over there, which is why it's a good area to be locking in some of those gains. But trading that stop, as I said, down and keeping the new stop in profits so that it's now risk-free. Because what we got on this trade was a full break through the gap. Therefore, clearly long positioning was wildly offside and there was way too many longs pushing up, trying to squeeze that short trade that I spoke about, which is creating a very bearish market. And this consolidation right now gives me no reason to TP as much as I want to lock in some gains right now. There's no price action trigger to even say that this is likely to reverse. It's consolidating with a downwards lean, bleeding, and it's still trading slightly higher than the worldwide contract. So this is at 93.85, this is at 92.47. Now, previously, this would have been at 101 while this is at 92. So the gap has shortened a lot, but it looks like there's still a bit more of an unwind to go. The fact that this is still trading higher, there's no reason to. Why is US oil trading higher than worldwide oil when it's a Middle East conflict? You should expect the opposite. And as I said, that's why you're seeing that clear positioning from traders actually now having to really unwind on the US contract. So I think there's a bit more to go given that we still got that gap here. So we'd be watching 89.51 and 84.37 for TPs to lock in some gains. And that will be definitely, monthly gains wrapped up in one trade there. And that's how trading goes, guys. One trade can make up your monthly, quarterly returns. It's not about win rate. It's about expected value. If you don't understand that, if you want to follow my trades, well, drop me a message on Telegram, get yourself into school, come print with us, come learn how to be a consistently profitable trader, take your finances seriously, and I'll get you in there if it is interesting to you. Just click this link over here and you'll be able to message me on Telegram to join. So that's a little update on oil. Obviously, this has created now a massive risk-on rally in the markets. Look, these markets are all interlinked, guys. I know you want to see crypto only sometimes, but look, YouTube's a hobby for me. I'm here to make money, so I'm here to give you guys the real deal, all the data that you need to succeed in these markets. And that includes all of these other contracts. Volatility is all we need to make money, and oil had the best setup since it was at an extreme. It was at prices it hadn't been at since the war started in March. So it had the most room to move, and that's what we need with these markets. Don't get married to an asset, especially crypto, when you've seen altcoins make lower high cycle over cycle. Not the time to be married to crypto. 2021, maybe you'd get away with it. Now, the hand has been shown. So keep that in mind. Hopefully this analysis doesn't bore you guys. Real ones are still with me 8 minutes in, but let's dive into Bitcoin. So H4 gap held. Talk about this gap, and I said that Bitcoin, if it's going to bounce, it's going to hold this gap and move upwards, and it did. Reclaim the Q2 open, and that led to the rally. Of course, then you get the news, then you get the headlines, but price showed the trigger, guys. Reclaim the Q2 open. That was your trigger before any news. We're now above the 50-day EMA, which we've not been above for an extended period of time. So let's see if we can beat the last time we were above it in March, where we spent, really just 3 days above it before losing it. I think we will. It's a much more bullish setup right now because you've had so much resistance to going lower. If we pull up the daily chart on Bitcoin here, what you can see is these constant higher lows just forming over and over. Couldn't break the pre-war level. So we had all the chance to sell off here. We didn't. So it just looks like the path of least resistance continues to be up. And that's what I said yesterday. You're getting this upwards grind higher that's difficult to trade. And that's what's throwing most people off. I think what people are going to make the mistake of now is shorting a move too early. You've just had a massive bullish impulse. There should be no reason to be getting into shorts on Bitcoin right now because this looks like it wants to go higher. So what I'd be watching for long setups would be dips into this H4 gap. I don't expect it to go below the 50-day EMA at all. So dips as close to that 50-day EMA, which is at 70.5k, would set up a potential long for me that I'll update you guys if I do take it as always in the school. That sets up a long trade towards 74k, which is the breakdown level, and that H4 imbalance, which is what I'm more so looking at. So 74k is a previous level we've really failed to break and hold above. We had a little bit of price action above it, but barely any. That's clearly resistance. So for Bitcoin to turn bullish, it needs to break and hold above 74k if we're going to go towards 80k, which is definitely on the cards now. If not, I'll be watching this H4 imbalance zone as a better place to actually get your shorts. See, this is where I'd want to look for mean reversion shorts. If we hit that untested H4 imbalance, much like the oil trade, be looking for potential setups if I see a reversal, just for a mean reversion trade back down. Wouldn't be looking for new lows, as it can very easily form a higher low and continue on higher from there. So you want to keep that in mind. But I think that's the target. I think we're going to hit 74k at least, and probably this H4 imbalance zone where, either we form a higher low, or we could keep going lower, or maybe we do just have super bullish price action, we just blast through it. But that's what I'll be looking at in terms of shorts. I'll be waiting for that H4 imbalance, because markets are pointing upwards. Early shorts, like always, they get wrecked off the headlines because they short way too early. They're revenge shorting. They're saying, oh my God, Trump tweet, it's going to fail, it's going to fail. And I think that's the least likely scenario. The least likely scenario is going straight down from here and filling in that candle. Maybe I'm wrong. Maybe we do have to come back down and fill in this entire H4 gap. Wouldn't surprise me, but I don't think that's the most likely scenario. I think most likely scenario is holding above that daily 50 now and wicks into that gap being a buy, where I'd look for potential longs, and wicks towards the H4 imbalance, where I'd look for potential shorts. So again, this is not stop loss entry signals, guys. In the school, I'll tell you what I do in my trades. This is just an idea for high areas of risk to reward. That's where I want to take a long, and that's where I'd want to take a short if price action allows it. So may just go straight up from here. Let's see. Bitcoin's trying to reclaim that daily open here. So I think we're just consolidating, which is good to see. Holding, reaccumulating above this gap. That's why I say any dips, into this H4 gap may even be a shallow dip, just like this. As long as you're seeing it hold and you leave the liquidity, then that is a bullish consolidation. If you take the liquidity and just start pumping upwards inefficiently like this, it's way more likely then to just be a failed rally. It's way more likely to then top out of the H4 imbalance zone, and you probably actually then get a short much earlier. So if we're not going to consolidate, we're not going to dip into the H4 gap, and we're just going to go up only today, I'll be way more inclined to then look for shorts, because as I said, as you heard from the oil trade, if you leave gaps on the way up, they're much more likely to get tested because they become a target. Even if bullish, even if you are just going to form a higher low and continue on, you can take the short from a simple mean reversion standpoint, the fact that there's just gaps to fill in lower. You can take whatever trade, whatever risk reward you get in there. So that's something I'd be considering on Bitcoin. If we go straight up and don't consolidate today, then that sets up potential shorts, because the quicker you go up, the quicker you can fall. It's as simple as that. So that's the setup that I'll be looking at on Bitcoin. If we get rid of this, actually, we'll hide it because it'll probably be useful in future videos. Get rid of this. This is now a zoomed out view of the support and resistance. So clearly we've got risk on back. We can see that in the markets because oil has dumped, got the peace talks, markets are rallying. So the floor is set now for Bitcoin to move up. I think the H4 imbalance is going to be, a place to provide resistance, but you've also now got every chance of coming towards this inside monthly candle high at 79.4k and tagging that 80k level. And therefore, if we do get more efficient price action, as I said, and you can just consolidate here, build a bit more of a base, then I think we can see a move to 80k, and maybe that's where we then go for a bit deeper of a sell-off from there. And that would be your weekly imbalance zone from the previous consolidation breakdown over here. That's another area where I'd be looking for shorts then. If Bitcoin can reach that, it's going to be a place to look for a mean reversion setup just to start filling in gaps, especially, as I said, if it's inefficient on the way there. So that's what I'll be watching. Got inside week monthly candle high. That is untested right now. And you've also got the inside monthly candle low, also untested, but looks like we're going to be pushing upwards due to the risk on nature that we've been seeing. So that's Bitcoin. Remember, guys, if you don't want to miss out on all these trades, you want to trade Bitcoin, you're not going to miss out on the oil setups, the stock setups, the gold setups, then there's a link to Yubit here where you can literally trade US oil. As you can see here with your USDT. That's why I tell you guys about this, guys, because there's so much opportunity out there, more than just crypto and altcoins, which are all just bleeding to zero. Start trading assets with volatility that actually offer you high risk to reward, and Yubit allows you to trade all those assets with USDT and bunch of deposit bonus rewards here, which you can read. All you need is an email to sign up. So link below in this video over here, get yourself signed up so you can trade all these assets and not just be limited to crypto setups, because there's so much more out there. Stock market, it's been way more bullish than Bitcoin. It's already made new highs for the day. And I told you guys in the school that, we're consolidating above the Q2 open. This is a bullish setup. And that's why you're now seeing the strength on stocks. And S&P, for the first time in months, is above that 50-day EMA. It's not been above there since February. So, a big change of character with this war. Told you guys, Max Payne scenario. If you watch my weekly outlook, you watch my monthly outlook, I said Max Payne scenario is Bitcoin doing exactly this. I'll get the video up. Bit sad, by the way, guys. Look at all these videos dropping in views, even though I'm giving better and better content, better and better calls. So please make sure you smash a like and sub if you haven't already. It was getting 800, 900, 1,000 views here, and now we're getting 300, 500. Crazy. Don't know what to do sometimes. But essentially, weekly outlook, told you guys to look at, where was it? Max Payne scenario. I talked about the stock market. I think it was this video. It might have been the monthly outlook, actually. We go over to here. Yeah, Max Payne scenario for markets. And it was... I found it there. There you go. Stock market. Told you guys, rallies your Max Payne scenario on stocks here because people don't know what to do when it comes back to mid-range. This is everything I talked about in that monthly outlook video, because now that you've rallied up here, what do? Do you go short? Well, you risk stock market blowing out and going on its classic just up-only rally. Do you get long here? Well, you're below resistance, below clear distribution, so you could also come back, fill in this gap and still be bullish, or if not, go to new lows. So you're at this place now where people don't know what to do. And I told you guys, this liquidity target, first one to watch, we've hit it now. And you've got the JPM short call trade over here at 6840, which is an area to look for resistance, I think. So it looks like there's more juice to come in this squeeze on stocks. Very inefficient, lots of gaps left behind. You guys know what that means, so be watching if we can push a bit higher into that 6840 and we see signs of rejections. I'll take a swing short on the S&P back down just to fill in some of these gaps over here, which we've now left behind. Maybe we form higher low, or maybe we continue lower, but my trade would be watching for signs of a reversal, because that should be a resistance level. Shouldn't get above there, may get above there, so it's going to be price action dependent, where I'd look to then take a short setup. Patience is the play. Again, revenge shorts are going to get wrecked today, tomorrow, likely the rest of this week. So it probably comes next week, this trade actually, but big gaps now. Expect it to squeeze higher, but that sets up for mean reversion shorts back down. That's the play when it comes to the stock market and what I'd be looking at. Gold, you guys know, still waiting for this setup, so waiting for it to push up higher towards 5K. Early signs of exhaustion here with some of these wicks you can see failing to push higher, but I still think, again, revenge short, early shorts always tend to get wiped out first. And you're in a flag, so it's, very easy for it to push up higher and then actually start reversing over here, where I think you're better short setup. And again, I want to see gappy price action up into that 5K level, ideally just shy of it, and that's where I'd take a short back down towards this daily imbalance over here. So that's gold. Want to see it push higher. It's been quite efficient, so not been as inclined to look for any shorts yet. I need this to gap higher and show signs of reversing before I take a trade over there. So that's the full market update, guys. If we take a look at some of the altcoin setups, I wonder how they're doing. So we've been talking about these for a while now. Tau is moving up into the daily imbalance zone. Interesting. Okay, so I'll be watching Tau for potential rejections here now. That can either come in this zone right now, or it can come off a sweep. So I'll be watching lower time frames now for signs of rejection. Are we getting that now? No. H1 structure's intact, and you could see something like the H1 bands holding. It's not the time to just short into a rising market, but you see it push higher with inefficiencies, clear exhaustion. Boom. Can start looking for shorts then back down because now you're on the right side of the V. So that's what I'll be looking at on Tau now. And maybe that is going to be, a bit more violent of a squeeze up to really sweep the highs. If so, even better. Can manage your risk to reward better with stop clearly at the highs then, if we do get that scenario. So that's the setup there on Tau. We're going to now be looking for shorts. I think it's going to squeeze higher. I fully expect it to go higher. Just depends where it gets a sweep or whether it shows signs of reversing before that. But you're in the zone now where risk to reward is good. Hype. Let's get the Bybit chart up. So yeah, didn't close below the 2024 pivot. So it didn't trigger this long. This short, sorry, that I've been talking about. Told you guys you need to see a break below the Q2, the 2024 pivot, sorry, for this one. Didn't get that path, so looks like we're getting something more like this purple path over here, where we've actually flipped this daily imbalance now into support. So I'll be watching for squeezes up into here now. And it's nice and inefficient on hype, actually. So this is getting very interesting now. If we can really squeeze up into there, I'll be looking for a short setup to trade back into some of these gaps. The more gaps, the better. You guys know the drill. So that's what I'll be looking at on hype. Potential setup there. Got alerts already. Already ready on hype. Any shorts there. So again, guys, want to join the school? Want to follow my trades, follow my analysis? Drop me a message on TG. Get yourself on an exchange where you can trade all assets, not just crypto. I'll see you guys in the next one. GM.